All right, let's break down a massive earnings report from one of the nation's largest banks. PNC just dropped its third quarter numbers for 2025, and boy, is there a lot to unpack here. So let's just dive right in. First things first, let's hit that headline number, and it is a big one. A whopping $1.8 billion in net income for the quarter. I mean, just to put that into perspective for you, that is a massive 21% jump from this time last year. A number like that tells you right away that something big went down this quarter. So how in the world did they get to that big number? Well, it wasn't just one thing. As you can see, we're talking record revenue, they kept their expenses in check, and their core business, loans and deposits, grew. It was just a super strong performance pretty much across the board. And you can bet the leadership team noticed. The chairman and CEO, Bill Demonchek, called it another great quarter, and he pointed to steady client growth as a key reason why. That kind of quote, right, from the top, it just sets this tone of confidence that you can feel through the whole report. Okay, so let's dig into this a little bit more. In this first section, we're going to see how this performance really stacks up. And really, the theme for this whole section is simple. Records were being broken left and right. What's so interesting when you look at these numbers is just how consistent the growth was. It wasn't just one single area carrying all the weight. Total revenue, up 9% year over year. Net income, like we said, shot up a massive 21%. And even their fee income, the money they make from things like asset management and credit cards, grew a really healthy 12%. This wasn't a one-trick pony. This was broad-based success. So that naturally makes you wonder, right? Where exactly did all this growth come from? So let's zoom in and see which parts of the bank were really firing on all cylinders. First up, we've got their powerhouse division, corporate and institutional banking. This is the part of PNC that deals with huge corporations and institutions, a massive piece of their business. So, how'd they do? Spoiler alert, it did really well. Revenue jumped 10% from last year, hitting a record high. And you can see the business underneath is just as strong, with both loan commitments and their average deposits growing nicely. You can see how these are the engines that are going to keep driving earnings down the road. Okay, so the big corporate clients are definitely firing on all cylinders. But what about you and me, the everyday consumer side of the bank? Let's take a look at retail banking. And this paints a pretty clear picture of a really healthy consumer. Revenue was up a strong 9% year over year. But the real story is how people were spending. Check this out. Both debit card transactions and credit card spending hit record levels. It just goes to show you PNC's customers were out there, they were active, and they were definitely spending. All right, last but not least, let's check out their third major division, the Asset Management Group. This is PNC's wealth management and advisory arm, where they help their clients manage their money. Yep, it's another record-breaking story. Revenue was up 9%, and the total assets they manage hit an all-time high. But wow, get a load of this last number. Their assets under management in what they call expansion markets, so places where they're really trying to grow, grew by an incredible 25%. That's a crystal clear sign that their growth strategy is absolutely paying off. Okay, so we've got records falling in every single business line. The growth is just undeniable. But here's the billion-dollar question. Is all this incredible growth built on a solid, safe foundation? Let's take a look at the bank's financial health. Okay, so the heart and soul of any bank, right, is its balance sheet. And this shows really healthy growth on both sides of the coin. Average loans climbed to almost $326 billion, and that was funded by a growing deposit base of over $431 billion. This is just fundamental banking 101, and you can see it's growing. Okay, so before we hit this next number, let's do a real quick explainer. We're going to talk about something called the CET1 capital ratio. It sounds super complicated, but the idea is actually pretty simple. Think of it as a bank's financial cushion, kind of like its safety net, to absorb any unexpected losses. The higher this number is, the safer the bank is. So what's PNC's number? A very healthy 10.6%. Now, this is well above what the regulators require, and it shows a really strong capital position. It's just a key sign that you're looking at a well-managed bank that's built to last. But we can't talk about bank health in 2025 without addressing the elephant in the room, commercial real estate, specifically that struggling office sector. So is there some hidden risk we need to worry about here? Well, to their credit, PNC tackles this head-on in their report. They're not trying to hide from this risk. They're getting ready for it. This shows their exposure to office loans, and if you take a look at that highlighted section, you can see they've set aside some serious reserves. So what's the bottom line? What does this actually mean? It means they have set aside reserves equal to 14.5% of their multi-tenant office loan portfolio. That's a huge financial cushion set aside specifically for this one area of concern. It shows they're not asleep at the wheel. They are actively managing this risk. So the quarter was an absolute blockbuster, and the financial foundation looks really solid. But what does this all mean for the road ahead? Let's take a look at what's next for PNC. Look, the earnings were amazing, but you could almost argue they got overshadowed by an even bigger piece of news that points directly to the bank's strategy for the future. And here it is. At the same time they released their earnings, PNC announced they're acquiring First Bank. This is a huge move, and it's all about hitting the accelerator on their growth and really expanding their national footprint. All right, so here are the nuts and bolts of the deal. It's a $4.1 billion transaction, and it's going to give PNC a top spot in Colorado and a much bigger presence in Arizona, two markets they really want to grow in. And just to give you an idea of the scale here, this move is going to more than triple PNC's branch network in Colorado alone. They expect the whole thing to close in early 2026. So, where does that leave us? When you step back and look at the whole picture, you've got a quarter with record profits, a balance sheet that looks rock solid, and now this huge acquisition that's all about the future. It all leads to the big question. After all this, what does the immediate future hold for one of America's most important banks? Really leaves you wondering, doesn't it? Thanks for tuning in.